and you and I have spoke about this a couple of months ago, that the market has probably peaked back then, and we're going to see inflation creep in, and we're seeing it start to creep in. I mean, I filled up my gas tank today. It was $3.29 to fill up my tank, a gallon, and that's up from, I don't know, I think it was a $1.70 about 2 months ago. So it's starting to creep up there, and gasoline is the first thing that consumers worry about. That hits them the hardest because this is a driving economy. Everybody drives everywhere, you know. So that is creeping up, and that is getting into the investor's mind. And I think if they don't get a hold of this inflation, it could be a problem come this fall when people really go back and start to shop. Remember, gasoline takes a big bite out of your budget. So now if you're spending more to fill up that car, that's less you're going to be spending on retail sales. And we had a great month for retail sales, yet the market's overlooking that because of inflation worries. The markets are forward looking. So yeah, we had a great month for retail sales. Came in up 0.6% versus an estimate of up 4.4%. So they came in very strong, but you got to remember that's pent up demand. People were just getting out because a month ago people were looking, hey, the virus is under control. They weren't popping up like they're starting to do now all over the country. So I think we're going to see a double dip here with the virus. I think people are going to go back into their hole, not spend as much, and then they got inflation on top of that. You might be looking at a tough couple of months for retail sales, so we'll have to wait and see. But I think a lot of this, again, was pent-up demand. People got out and started shopping right away. I think the market's going to trend down. Probably not, I don't know about for the rest of the year, but I think in the near term, the market's going to have to do some readjusting, and people, at least traders, are going to say, you know what, maybe we should wait up, not jump in as much as we've been jumping in, and we'll see. I think you'll see the market come in, yes. I am a big tech believer. I think as this virus, if it does expand, if it does get worse, even though more and more people are getting vaccinated, but if it's that stay at home, I did see a pickup in New York City. I was in New York the other day, and I saw more people on the subway. I saw more and more people going into restaurants. So I'm seeing a little more of that expanding. But again, if all of a sudden we see a big jump in coronavirus here, and especially in New York City, I think you'll see that again, closed mentality. People stop going out, and rightly so. Got the other virus, the Delta virus, coming in here. So I think overall it's going to be a down market probably for the rest of the year. I don't see, you'll have these sporadic jumps where, we'll get a good earning and the market will go up. All you need is for Boeing to go up to take that whole airline up, or Apple to get great numbers. That might go up. But overall, that's like a one-day affair, and I think you'll see the market come in. You look at commodities, look at the dollar. The dollar's getting higher. That's going to hurt commodities. You look at most commodities are down because of strong dollar right now. And if you look at international markets, they're getting hit, again, because of the dollar. So I think basically the best place to put yourself is in some good American stocks. I like American stocks. But, I mean, there are some good European stocks you can put your money into. I just like the American accounting, and I just trust the American accounting. I believe the numbers you see are the numbers you get. So basically, I would look to put money into the tech sector. I think the tech sector, as you just mentioned, home again, if you're going to be stay-at-home stocks, are going to be the Amazons. They're going to be people buying new Apple devices. They're going to be, Google. These are things that are going to do well. And the advertisers know it, so they're going to put money into that. And the streamings. I think Paramount streaming is going to do well. A friend of mine went to a theater the other day. Okay, a theater, brand new opened on a Friday. He went. 2 people in the theater beside him in New York City. So, I mean, people aren't going out to the theater anymore at the moment. So I think it's going to be stay at home as this virus, if it gets worse. I mean, if all of a sudden they say the numbers are good, people aren't getting sick, yada, yada. But I think the numbers are real. People may get worse. And again, so I think you'll see people button up and stay at home. And those are the stocks, the tech stock. That's good. The Amazons, and then, a lot of these home delivery things where you're getting your groceries at home. Those things, grab and go, are going to do great. That's how I'm playing this right now, to be honest with you. Well, I know Kathy. I like her. Smart girl, great trader. She's very good, that's for sure. But on this particular case, I have to separate from her. I think, first of all, anyone that goes into the Chinese market or any of these other countries, especially if they're communist countries, know the risk. I mean, it's not like it's a surprise. We invest heavily in the Chinese market, but we know there's a risk whenever you have a government that's going to oversee some of these stocks. I mean, I think I mentioned this once. A lot of not only China but a lot of countries outside the United States, their bottom line is always matters. That's for sure. But they're also interested more in social events, how that's going to affect their country, and you have to take that when you get invested in these stocks. And one thing about China, you got the last time I looked, you had 1.3 billion people. So I mean, it's got a market that's can't no one can compete with them in that respect. Would we love to see a free floating currency? Yeah, but you're not going to get it. So we'll take that risk. That's the hedge we take when we invest in China. We know the downside, but it doesn't outweigh the potential upside. So that's how we look at it. In cryptocurrencies, I'll tell you, they're air. There's nothing there. And I always tell people, especially if you're going to Bitcoin, Bitcoin could go to 100,000, but it was down 30% at one point this week. It's back up today, so it's all over the place. You have to have a strong heart and deep pockets to play Bitcoin. It's not for the average consumer or the average trader. It's a risky business. It really is. I mean, you might want to go into, say, DOG, one of those little coins, because they're 60 cents. So if you lose half your value, what'd you lose? 30 cents. But if you're in Bitcoin at 30,000 and now it's down 30% like it was at the beginning of the week, you're out real money. Now, it came back, but there's one of these days it may not come back. As far as the Chinese economy, I put a lot of money to the Chinese economy. They're smart enough not to tweak it too much where it's going to hurt their economy. So I think overall, they're not going to rock the boat too much. But yeah, they'll tweak what they have to, just like we'll tweak what we have to in a different way. So yes, I like the Chinese markets, and I have more faith in them than I do in Bitcoin. No question about it.